Consumer sentiment just tanked to the lowest level in nearly 2 years, and inflation expectations haven't been this high since the early 80s. Let's unpack what this means for markets, your money, and the economy heading into summer. Hey everyone, I'm Robert. Welcome back to The Alternative Investor. Today we're breaking down the most recent University of Michigan Consumer Sentiment Report and why this quiet warning signal could have major implications for the stock market, the Federal Reserve, and your portfolio. From inflation fears to rising unemployment expectations, we're seeing signs that consumer confidence is unraveling. And historically, that's a red flag worth watching. Let's start with the numbers. The Consumer Sentiment Index fell sharply to 50.8, down from 57.0 in March. That's the lowest reading since June 2022, when inflation last peaked and recession fears were dominating headlines. One-year inflation expectations surged to 6.7%, a level not seen since 1981, during the Volcker era when the Fed had to raise interest rates above 20% to crush runaway inflation. Five-year inflation expectations rose to 4.4%, suggesting consumers believe inflation isn't just a short-term issue, it's becoming a structural concern. The share of Americans who expect higher unemployment in the coming year is now at its highest level since 2009, the middle of the Great Recession. Here's why this matters. Historically, consumer sentiment is a powerful leading indicator, especially when paired with rising inflation expectations. Let's look back. In 1979 to 1981, consumer sentiment cratered right before the Volcker-led Fed hiked rates aggressively. Stocks plunged, unemployment spiked, and inflation was only tamed through recession. In 2007 to 2008, a similar collapse in sentiment preceded the financial crisis. Even in early 2022, when inflation fears hit, sentiment dropped below 51, and the market corrected sharply over the next 6 months. Every time consumers lose confidence at this scale, the economy has either entered or hovered on the edge of recession. What's fueling the drop in sentiment? Several factors are weighing on the American consumer: ongoing geopolitical tension, including the recent US-China trade flare-up and fresh tariffs. Persistently high prices for essentials, from gas and groceries to rent. Fear that the Fed may keep rates higher for longer, choking off access to credit and loans. Rising talk of a hard landing, with more layoffs appearing in tech, retail, and manufacturing. Consumers are feeling the pressure, and that pressure is showing up in how they spend, save, and invest. So what does all this mean? If inflation expectations remain elevated, the Federal Reserve may be forced to delay rate cuts, or even tighten policy further, despite slowing growth. Sluggish consumer sentiment often precedes a slowdown in consumer spending, which accounts for over 65% of US GDP. The market may begin pricing in recession risk more aggressively, especially in sectors tied to discretionary spending, real estate, and lending. This isn't necessarily a call to panic, but it is a call to pay attention. In moments like this, smart investors start adding defensive plays like healthcare, utilities, and consumer staples. Consider increasing cash or short-term bond exposure. Hedge inflation risk with gold, energy, or commodity-linked assets. Look for quality dividend stocks and companies with strong balance sheets. Consumer sentiment has dropped to 50.8, the lowest since June 2022. Inflation expectations, 1 year at 6.7% and 5 year at 4.4%, are rising fast. Historical data suggests this combination often precedes economic slowdown. The market could face headwinds if consumer spending pulls back or the Fed stays hawkish. Bottom line, pay attention to sentiment. It's often the first crack before the bigger break. Do you think the US is heading for a recession? Or are consumers just spooked short-term? Drop a comment with your take. If this video helped you, give it a like, subscribe for more macro and market updates, and check the description for my favorite investing tools, including how to claim a free stock with Robin.